The crypto news cycle has been heating up. All of a sudden, we have things happening across the board with centralized finance, centralized exchanges, the SEC regulation. Of course, Coinbase now getting probed. Sounds terrible. Getting probed by the SEC. FTX making an offer to Voyager that Voyager did not seem to like very much, and a whole lot more. Now, we're supposed to have Harry Dent on today as a guest, but as of now, he has not showed up, hence why we are a little delayed. So I'm going to go ahead without him for now and hope that he does show up. Either way, you don't want to miss it. Let's go.
Let's go.
What is up, everybody? I am Scott Melker, also known as the Wolf of All Streets. Before we get started, please subscribe to the channel and take your watch, because it's 9:37, and drop it on the unlike button because we're 7 minutes late. We're never 7 minutes late, but today we're 7 minutes late because we are waiting for the guest who is yet to arrive. Happens sometimes to try to give them some time, but alas, not today. Before we get started, of course, as you can see, Bullish. You guys know everything about Bullish by now because you've been here long enough to have seen me talk about them over and over again. But if ever we have learned the lesson that it's not your keys, not your coins, I think that is true now, myself included. But they give you all the advantages of a centralized exchange, but with all the deep liquidity of a decentralized exchange, and of course that you operate from your own wallet. Your keys, therefore your coins, guys. So listen, I haven't been here since Thursday. It's now Tuesday. We went on a bit of a family vacation with my wife's entire family. 19 people in one house. I don't know. 12 of them were children of varying ages up to young adults. It was pretty epic. It was a lot. And now that is why I have not been here, but I am back once again. Yeah, poor guy has probably gone through life hearing Batman jokes. His name is Harry Dent, and all of you have, I can see in the comments, are talking about Harvey Dent at the moment. Harvey Dent. I would love to have Harry here. I had him on the podcast before. You guys may have remembered it. Yes, he's a bit of a known bear, I think would be an understatement of the century. Has been calling for a major recession, depression, economic collapse, reset, whatever you want to call it, for many, many years. Of course, it has finally happened. People can debate whether that means you predicted it right, or if you just eventually say enough that it's going to happen. But I remember on our podcast him saying that he thought that Bitcoin was priced much higher, I believe was going to go all the way down to 3,000. But his point was that the same point I often make is that if you look back to March 2020, you can see that once everything bottomed, Bitcoin, crypto were the asset class that you wanted to own because we went up, 17 times while the stock market went up twice. So he's saying he's a heavy, heavy buyer in crypto when the time comes. I was curious to find out if he believed that time was now or not, but here you go. There you go. Harvey Dent. Scott's kid stole the power cord. I mean, it's happened before. Don't worry, Scott. I noticed you were gone. I was very worried that you guys were not going to miss me. Yeah, it happens. Listen, are you nervous promoting exchanges? Just saying seems counterintuitive. Well, I obviously learned my lesson with CFI, because I'm a huge user of all of those platforms and have obviously suffered. But no, I do not think that centralized exchanges have a problem. And if our reliable exchanges, I'm not obviously promoting Coinbase, but if we have platforms like Coinbase end up having problems, well, our industry has much bigger problems than what you're seeing from advertisers or sponsors on YouTube. This becomes massively problematic for Coinbase, then it becomes massively problematic in general for crypto users in the United States, certainly to even be able to get their money in and out of fiat. We have a whole large host of problems. But no, I think it's very important that we still attempt to push forward the platforms that have been reliable, the platforms that have served people well. And obviously the entire space needs us to have these services and companies to exist for us to be successful. So no, that to me is no, not at all. No, none, not a problem. So we're going to go ahead and just dive right into the news. SEC probing Coinbase for allegedly listing securities. Report. Can you imagine getting probed by Gary Gensler? Nobody wants that. Nobody wants to be probed by Gary Gensler and his long arm of the SEC, but that is what's happening here. Now, a probe does not mean there's any sort of litigation or lawsuit or regulatory crackdown, but it does mean that they're finally taking this securities thing seriously. And we knew that it was coming. So if you guys missed it, of course, last week, there was an insider trading allegations against an ex-employee of Coinbase who was passing on early listing information to his brother and his best friend. They were trading on it. Of course, we all know about the history of the Coinbase listing pump, and that's what they were taking advantage of in advance. But what was interesting is when the SEC filed those charges, they very quietly mentioned that 7 of the assets were securities, right? Now, keep in mind that we have no idea, because the SEC and no regulator effectively has ever told us how to define any of the various crypto assets. Are they securities? I don't know. How would we determine that they're securities? Is it by the Howey test? Is it some new test? They've basically just left it completely amorphous, of course, so that they don't have to make things clear and they can just go ahead and attempt to litigate and probe at will. And that's what they're doing here. But now, sort of formalizing it. And apparently this probe existed before those insider trading allegations, which, by the way, Coinbase was the one who contacted the SEC to tell them about that. So they ratted out their own ex-employee, which is probably justified. He was breaking the law. But now Coinbase is allegedly going after Coinbase, the SEC is going after Coinbase for allegedly allowing Americans to trade unregulated securities. Pretty big language. We know that they don't consider Bitcoin a security, but what if they deem everything else a security and retroactively say that these platforms were allowing us, without being accredited or without going through the Howey test, to trade these assets? This could be highly problematic. I think, in my opinion, it's just my opinion, that the SEC has seen the Gillibrand and Loomis bill and other legislation proposals that's pushing regulation towards the CFTC to deem most coins commodities and not securities. Well, Coinbase, as a publicly traded company, is very much under the auspices of the SEC. And that's why I think they're probably attacking Coinbase and going after it in this manner. And I think that Gary Gensler wants to regulate everything. He's the Warren G. and Nate Dogg regulators mounting up. And he doesn't want to see power slip through his, Mr. Burns-like fingers, right? And so now is the time that we're going to see it, right? First they ignore you, then they laugh at you, then they fight you. Hopefully then you win. It seems like they are very much fighting us right now. Yeah. Insider trading has a long history, longer than Bitcoin, says Cosmo the Wonder Dog. And yes, I think we know that's true. And I think we all know that Nancy Pelosi is the queen of this, but nobody's looking in that direction. Gary G needs to be probed, if you know what I mean, says Gregory Russell. He is the prober, not the probee at the moment, although I have no idea what he does in his personal time. Like Kristen Thone here says, can't wait to win. That's right. Then they fight you, then you win. Now we just need to win. But this definitely is the story right now, because this puts the SEC at odds with legislators. This puts the SEC at odds with other regulators like the CFTC, and it puts the SEC at odds with the entire crypto industry. And they still not offering any clarity as to how to proceed. You guys might remember Coinbase actually went to the SEC and said, hey, womans, we want to offer a yield product, 4% yield, given we all know that the industry was 10, 15, 20% standard. 4% yield, potentially accredited investors, much like Circle does with their USDC lending. And the SEC didn't just tell them no. First of all, they didn't give them an answer. They just said, if you do that, we will sue you. Right? Regulation by litigation, not really the way that the SEC should proceed, but that is what we now have to clearly contend with. Hey, guys, Harry is here. Very excited. I just saw him up here, so I'm going to go ahead and bring him on right now, and we can chat. Harry, how are you?
Hi, Scott. Good.
Good to see you. Thank you for joining. So we moved on a bit with the news, but to circle back, obviously, I've had you on the podcast before. I mentioned this to people. I think it would be fair to say that you have been bearish and predicting a bit of a great reset. So obviously we are partway into that. So I'm curious as to what you think might be the case in the future, if we've seen enough or if you still see the full collapse coming.
First thing to clarify, I was the most bullish guy in history back in the mid to late 80s, saying the baby boom is going to cause the biggest boom in history. And the reason we've been struggling since late 2007, when exactly that was due to peak, with their peak in spending, was that now we have to live on stimulus. You know, we've had nonstop stimulus ever since. And so this stimulus keeps coming in waves, and then it's not enough. Why is it not enough? We're still in the downturn demographically after that wave peaked, and the millennials will take us up in the next wave around 2024. So we're in fact at the lowest part. So that's why they're having such a hard time getting the economy going, because it's dead, and it should be. And there's nothing wrong with this. And the fact that the Federal Reserve and central banks think we have to grow and their job is to never have a recession again. That is an absolute horrific misunderstanding of the economy. Booms and bust are both necessary. It's like being awake and sleep. So here we are, and they just combined fiscal and monetary 10.1 trillion in stimulus in the last 2 years since COVID. That's crazy over a short-term virus. And now that's why we've had disinflation all the way back since 1980, as my indicators would show, with slowing workforce growth after the baby boom had entered. And so here they are. We got 9% inflation, maybe going up to 10. That's all because of overreacting to COVID. And now the Fed has to tighten from their own stupidity of overreacting to COVID. And I think that's going to cook their goose. I think the stock market just peaked on January 4th and September, and one index after another, all the way back and throughout 2021. The Nasdaq was November 22nd. This is the first wave down, and it fits I've studied every bubble in history. The first crash tends to be 30 to 40%, and that's what this is, 35% of the Nasdaq. And so this is the first wave down. We'll probably get a bounce, and then we're just going to keep going down the next couple of years. My target is down 86% on the S&P, 92%. That's the worst case, but that's also more likely case. 92% on the Nasdaq. So this is serious stuff. What I have to tell people. I love financial advisors because they keep people from panicking and jumping in and out. This is a time to jump out. You do not hold through a once in a lifetime crash after a major bubble, not just a boom like in the 50s and 60s. That wasn't a bubble boom. This is a bubble boom like the roaring 20s. And those are followed by the deepest crashes, i.e. the 89% stock crash, 29 to 32, and 25% unemployment. I don't think we see 25% unemployment, but it could be 15 to 20. So this is serious.
So you're viewing this as the greatest downturn since the Great Depression, yes,
the greatest crash, bigger than 1973 to 74 after the last generation. Again, because that wasn't a bubble. That was the big crash after that generational boom peaked in 1968. You had a 70 mini crash and then 73, 74, and most of the damage was done then. Okay, this is a bigger boom of the bigger generation. It's also a bubble boom, which inflates everything way more. So the crash is going to be bigger. Yes, this would be the biggest crash since 29 to 32 in stocks, and probably not quite as bad, but near as bad.
The last time we spoke, and obviously it was probably now over a year ago, potentially, time flies. You were talking about $3,000 Bitcoin, as a part of sort of that crash. I remember being your sort of floor bottom. But then you made the very important point that I make often, that was the asset class you wanted to own on the way back up. Is that still your position?
Yes, the dot-coms fueled the first, came in the late stages of the first bubble from 97 into 2000. That bubble was late 94 to 2000. And the crypto's coming in right thing 20 years later, right on my technology cycle. You get two of these every 45 years. And so it's the next big thing. It's a baby. It's in an infancy. So it is overvalued today at 69,000. Come on. But the baby bubble is the greatest bubble versus reality. but it's going to crash down far enough. I'd say 3250 was the bottom of the last crash. Okay, there was 3 bubbles. The last crash, 2017-18, went down to 3250. That's why that's my bottom end target. I'd say 3250, 10,000 minimum. So anybody that thinks that Bitcoin's a bargain here, you buy it at 35 and it goes to 10, you're going to be hurting. And it goes to 3250, you're going to be really hurting.
Yeah, but and we both pointed sort of to the COVID lows in March 20, though, just to go back to the point of what you wanted to own. Everyone talks about how the stock market doubled, but Bitcoin went up 17 times from that.
Hold on 1 second. Hey.
No problem. Get him. I'm going to go ahead and take Harry off and let him do his private thing, whatever he's doing over there. And I'll bring him back on because he's got people walking around now in the background. Awesome. I do not look depressed, Cosmo. I got you back on there, Harry. No problem. I brought you out just in case anyone crazy was going to run by naked or anything. I never know what's going to happen in the background.
Yeah, we had maids come in I didn't expect.
Well, that's a nice problem to have, I would say. So you're saying that all of this happens in effectively the next year and a half to 2 years, with 2024.
I would say, it would buy my best target for bottom would be between late 2023 and mid 2024. It would have normally on my best cycles, it would have been late 2022, but they pushed this back so far. So that, yes, this should take at least 2 years. And the peak was January 4th, 2022. And optimally it would take 2.5 years.
I mean, everybody's sitting here arguing the definition of a recession, whether we're already in a recession, whether we're entering a recession, and you're talking about a Great Depression here.
Yes, I'm talking about, yes, exactly. It is not a recession because it is a time where you finally restructure all the debt. That's why it's so nasty. And that's why it's deflationary. Debt creates money. Everybody knows when banks make a loan, they don't loan you all their cash. They put down 10% and create it. Okay. So money's created. And so all this money has to be decreated. So there's less money chasing goods. So that's what causes deflation. And the last time we saw deflation was in the 30s. So this is not going to be a great downturn. It's not going to be like the 70s in an inflationary era. It's going to be deflationary. And in deflation, all financial assets go down except the very safest, which here and in the world is U.S. long-term treasury bonds. It is not gold. The hardest thing I have to well, gold's the true money. No, gold bubbled up even more than stocks. Okay. And it's the strongest of the commodities. Gold went down in 2008. It went up at first thinking it was a safe haven. And then when it got difficult in second half of 2008, gold went down 40%. So gold will not go down as much as stocks. But if you're holding gold, you better be doing a little bit for diversification. It's going to go down. It's not going to be the safe haven. The 30-year treasury bond will do the best. It could go up 40, 50% or more while stocks go down 80% or more. That is a great deal. I
mean, in theory, even if it didn't go up, it would be where you want to be, correct? I mean, if you're saying things go down 90%, you don't need, right?
I mean, yeah, I'm just saying cash will hold your value or T-bills, okay? But the longer term, the quality bond, AAA corporate or 10 and 30-year treasury bonds of the U.S. But the treasury bonds are even better. So it will appreciate. That's a big deal to grow your money. And then you get to invest for the sale of a lifetime and buy stocks at record lows and everything, including gold, if you like gold. I mean, so real estate. Oh my God, this will be the last. We've had 2 real estate bubbles, just like we've had 2 stock bubbles, a little different timing, although these are coming together. Real estate will be the best buy you'll ever see in your lifetime, as well as stocks. And so you got to look at your real estate too. If you got a house and you got to be you love and you don't want to sell. I mean, I sold my main house, right? Because you're going to be able to rebuy it. My projection for the U.S. is real estate will fall 34% in the last crash, 2006 to 11. That was more than in the Great Depression because lending wasn't so liberal back in the Roaring 20s. Okay, it was more of a stock bubble. So I'm predicting this will go down as much as 50%. That's what's gonna hurt the most, especially for everyday people. Their house goes down. That's the one thing you're supposed to be able to rely on. You expect stocks to go up and down like crazy. You don't expect your house to go down 50%. Well, we already saw 34% last time. So that was the first wake up call. And then that'll be the last housing crash. You can buy real estate then and hold it for a long time.
Yeah. Interestingly, you touched on at the beginning that we have 9% inflation now. Maybe it goes to 10%. So over the next 18 months, what do you see for consumer pricing then? If all of these assets are obviously crashing and we enter a deflationary environment, will there at least be some relief on, consumer assets, food, energy?
Yeah. Absolutely. A deflationary downturn will take down most consumer prices. And commodities. Commodities are the one things that have crashed substantially before stocks and real estate and all these other things. But commodities will go down even lower too. So yes, everything from food. I mean, what you have is excess supply and lower demand because the economy's gone down. That's perfect. I mean, prices, yes, no question, consumer prices will go down. Won't go down as much as stock. They may go down, 5, 10, 20%. Well, that helps.
Yeah, it helps a lot. It's just interesting to hear. And I don't disagree. Cash is king, obviously, in any downturn. But of late, we've had one of those rare situations where asset prices drop, but the value of your cash also drops. So there's really been no place in the last few months that you're actually safe and not losing value. It's across the board. I mean, and you say people.
Yeah, the other thing I get is all these. Yeah,
go ahead.
But the gold bugs preach. It's the dollar that's going to go down, and of course stocks and all financial assets. No, the dollar goes up. The dollar was the only major currency that went up in the 2008 crisis. And think of this as the 2008 crisis. If they'd have let it go all the way and hadn't bailed it out with massive money printing, that crash should have been 2.5 years and should have gone much. That should have been like 29 to 32. So we're gonna have that 29 to 32 like crash now. So it just this is going to be as bad as it sounds if you just get out of the way. If you just give up your. Maybe I'm wrong. Okay, how much higher can houses and other things go after this long boom? Okay, if I'm right, you're going to buy anything you want at the sale of a lifetime that you will never see, and your kids may never even see.
Yeah, and so I want to go back and touch on the fact that you said that you think that crypto is the future, much like we had these sort of internet bubble pop, right? Of course, famously, Amazon went down 95%, right? And we can see where that is now. So why do you believe that crypto, besides the fact that obviously price action, why do you believe that that is the asset of the future and where you're going to want to have your money?
Okay. Here's why. Don't think of it as a coin. That is total baloney. You know what calling it a coin is? I don't have to call it an IPO or a stock. I have to go through all types of regulation and huge expenses. So these coins are ways that these early stage companies can cheaply raise money, and it can be traded. That's a great thing. The problem is you have tens of thousands of .com companies that just come out of nowhere with no scrutiny or regulation, and they're going to fall like flies. Okay. So, but it is the best definition. A guy was speaking at my conference a couple of years ago, and he defined it as the digitization of all financial assets and money. And I see Bitcoin becoming, it's useless itself. Ethereum spawns all types of applications. Bitcoin would become the standard for that once it got larger, more valuable. Once Bitcoin passes, and it will more than pass the value of all the gold in the world, it becomes the standard and matures and gets more steady. It can't be when it's like this. It could become the standard for a digital global system. All these different currencies, that's not a global system. It's such a pain in the ass to even travel, when you have to switch money and exchange rates and all this stuff. So that's a big deal because our GDP now, world GDP is about 95 trillion. Global financial assets are $580 trillion. It's the biggest number financially in the world. So if this is going to transform that area of the economy and make it easier to trade and compare, whatever, that's got to be the next big thing. So the last revolution was, .coms and the internet moving mainstream. That was a huge thing. Internet's one of the most important things that happened in history. More, linking computers. So that's why it's a big thing. You can't see that now. Bitcoin couldn't be that standard now with less value and so much volatility. It easily could be. That's my vision. That, this is the next big growth arena, and the world's just getting wealthier. 100 years ago, there wasn't enough wealth that this would make a big difference. Now, middle class people have a substantial amount of wealth, worth $1 million or something. So this is a big deal.
Well, that's if we retain a middle class, of course. So, Harry, thank you very much for joining. Listen, it makes me a bit terrified for the next year and a half, but really excited for the next 5 to 10, if that's a fair assessment, I think.
But it's good to be terrified. Get out. It'll be the best thing you ever did, the best advantage. And if people want to know more about me, harrydent.com, they can get on my free newsletter and get to know us. And then hopefully you'll want to get on our big boy newsletter.
You can also follow Harry on Twitter at Harry Dent Jr. HarrydentJr. Correct? I got that right? I think we're on a slight delay here. All right, Harry, you're having a little bit of internet problems. So thank you very much for joining. We always appreciate the perspective, and very important that people understand what the potential downside is, right? Because most people are not even mentioning those kind of numbers, and people should be aware that that is definitely a possibility. So thank you once again for joining.
Thanks, Scott.
Yeah, clearly we had Harry on a slight delay there, but I wanted to have him back because he was definitely one of the few people who saw that this was definitely coming for quite a long time. I really hope that that is not the bottom and we don't see a 90-something% drawdown on the Nasdaq, but it's happened before. It can certainly happen again. I'm going to keep moving on with the news. We already discussed, obviously, SEC probing Coinbase, and that some of even what Harry mentioned there is that it's very likely that a lot of these things will be deemed securities and traded as such. But talking about SEC probing Coinbase, the CFTC, who I think a lot of people view as a more reasonable regulator and the one that we would want to have control of crypto assets. That's why Gillibrand and Loomis pointed in that direction. That's why Sam Bankman-Fried and others in the industry have been spending so much time pushing towards the CFTC. Well, they've announced a new tech innovation office specifically to oversee crypto. And I think that, listen, this is a good thing, right? We know regulation is coming, and we don't want the regulators who don't understand the asset class to be the ones who come down heavy-handed without even doing the work. Well, to have a dedicated part of the CFTC who view crypto largely as commodities, I think would be a win for us. And that is what's happening here. Now, in the previous administration with Christopher Giancarlo, who I had on the podcast recently, that podcast should have had like 1 million listens. Obviously, it doesn't. But my God, talking about central bank digital currencies that he's working on in the future, he had set up Lab CFTC, I believe. That was Lab CFTC. And that's being now replaced by this new tech innovation office. So listen, as bad as it is what's happening with the SEC, there still is a battle going on here. And it looks like the CFTC going to approach this much more reasonably. And now for the story that everybody certainly has been asking me to address personally. Got a lot of comments that said, I'm surprised you haven't discussed FTX and Voyager in the newsletter. First of all, it happened over the weekend. Second of all, as usual, guys, I'm trying to make a point right now, not to rush to be the first to present something, but to rush to be the first to present something when it's shaken out and actually appears to be fact, and when I've actually done a bit of research and work. And I've read quite a bit, a few takes on this, a few threads. I presented a thread in the newsletter about this that seemed to align pretty well with my thoughts on the situation here. But as usual, listen, FTX made a public proposal towards Voyager, and people assumed that it was what was actually happening. It was accepted already. And so I immediately, of course, hit up the people I know at Voyager and said, wow, this is quite a proposal. What's going on? Their answer was, I don't know. We found out about it the same time as you, right? So what happened here is FTX put forward this proposal publicly, and it was delivered privately to Voyager as an offer at the exact same time, which is why it took a few days for Voyager to respond, for myself and others to absorb what was potentially happening here. And it made for very, very interesting research. So if you guys missed this, obviously, a lot of people have been looking for Voyager to get some sort of bailout, a partnership, a buyout, you name it, right? And a lot of people thought that that would be FTX. FTX would do what they did with BlockFi. They would come in, they would basically take over and rescue Voyager. What FTX has proposed here instead is that they offer instant liquidity on the existing assets in Voyager, less the 3AC claims. That's very important. They want nothing to do with Three Arrows Capital claims, and immediately give that liquidity in the form of cash, not coins, to Voyager customers. So what would that mean? I mean, let's say that Voyager, just throwing numbers out that have been used as an example by SBF. These are not the accurate numbers. Let's say that Voyager actually has 75% of the assets still, right? And that, so, you know, if there was $1 million, it's not in total that they owed, that they actually have $750,000 with those assets. We know it's much bigger numbers. Sam's point is, why is that money not available to customers right now? But that is treating this like a liquidation proceeding and not a restructuring proceeding, right? So what they're offering, which obviously has massive upside for Alameda and FTX, particularly for FTX, is that they would buy out all of those assets that exist from Voyager, basically a liquidation. All you'd have to do as a customer is go sign up on FTX, and you would have that money given to you in the form of cash immediately to buy back your assets. And then you would still have the claims to 3AC and all the other things in the bankruptcy proceeding. But that would be the end of Voyager, obviously. So it makes sense that Voyager found this offensive. They said that a lot of the information were assumptions and it was incorrect. This basically undermines what Voyager is trying to do, which I've talked about before in the past, right? What Voyager was trying to do, likely, with their stalking horse offer in Chapter 11, was to go through Chapter 11, clear all of the liabilities, clear all of the claims against them, and make it a clean sale to some potential suitor. Now, we've seen that they're talking about an auction at the end of August. They've claimed there's up to 80 people that are interested, 80 entities interested in buying out Voyager, doing some sort of deal, basically going to auction it off to the highest bidder. Well, that's going to be an expensive process, to Sam's point. So obviously, whatever assets are existing or being depleted on a daily basis could cost up to 9 figures by the time this is all done. But that would not require liquidating assets. And there is a chance, if the deal is done correctly, that customers could be made whole. And not only made whole, even if it's less than made whole, they could get their assets back in kind. Because here's the problem. I've talked to a lot of people about this. I have friends who are like, yeah, fuck it, man. Give me the cash, my 70%, whatever, I'm out. And they want this FTX deal. But for someone like me, there's some serious questions, right? As I've told you, it's primarily my Ethereum, a large stack of Bitcoin, some other coins. Is there a taxable transaction if FTX was allowed to do this and I accepted the deal in cash? Have I now sold at a major profit with some short-term and long-term capital gains all of my coins to make this happen? Or were those coins not actually mine, as Voyager said? How does this play out for taxes? I have no idea. That's a huge question for me. But also, I don't want myself, even as a trader or anyone else necessarily, to have to now go take the cash out, that percentage, and go try to time the market once again. So, inevitably people are going to say, well, this is, how much I had when they declared bankruptcy. I want to have that much Bitcoin, Ethereum. They're going to wait for a drop that doesn't come. They're going to FOMO back in later. I think ideally, all of us just want our coins back, right? I would certainly rather get 75% of my money back in kind than 75% of it in cash right now. Now, I'm making no claim that FTX, Alameda, SBF are doing anything untoward here, right? They give a lot of upside for the user who wants the flexibility and wants the liquidity right now. But this would be the end of Voyager, and all those customers would obviously become FTX customers. It's a pretty cheeky offer, as one of you said. It's a sharky offer, but would benefit potentially both sides. And interestingly, you would still, as a user of Voyager, get the benefit of the bankruptcy proceeding. So if 3AC actually has more than a down payment on a yacht to their name, a yacht that they don't have, that I feel like I own at least the sink on that yacht, maybe a toilet, maybe a piece of tile. But if they actually recoup some of those, you would still get paid back that part. But this, obviously, there would be no operating business for Voyager. And so Sam is basically making the argument that it's over. The people deserve their money. Voyager has the assets. We should get it. And Voyager is saying, hey, man, maybe we want to make everyone whole. And certainly we want to save our own necks. All I know is that right now, I've got millions of dollars in limbo. And frankly, I don't want it handed back to me in cash to figure out what to do with. And I think that most people don't as well, unless they're just trying to exit the market in general. So it's going to be a very, very strange process. I think they're just not going to even entertain the offer, to be quite frank. It's not going to happen. Be interesting to see how FTX continues to push on this. But Voyager clearly has a plan and wants to get this to auction at the end of August, because that would be better for them, potentially shareholders, certainly the company, and maybe for customers. It's a shit show, man. It's a shit show. Voyager certainly was not expecting that to be sort of proposed publicly and to have that pressure put on them. Holy shit, millions. Where you been, Kev? Yes, millions. I'm one of the top creditors, Voyager. Anywho, yeah, it feels bad, man. Feels bad. Tether finds stable dollar peg after Terra's collapse. Hey, guys, we did it. We did it. Now, this is an interesting one, right? Basically, the argument here is that Tether USDT has never gotten back to dollar for dollar since the Luna collapse, when the quote-unquote peg was lost, right? But what is the peg? To me, this is what USDT is trading on various centralized or decentralized exchanges around the world. That, to me, is not a peg. The peg of dollar to dollar for Tether is whether you can redeem it from Tether and get $1 for every dollar in Tether you have. And that has never failed, even with billions at a time in redemptions. And I believe like a 16 or 17 million drop, a billion drop, excuse me, in Tether's market cap, right? 16 billion drop to 65 billion in 2 months in Tether's market cap, which was 81 billion. They've been able to redeem every single one of those coins directly for $1. So tell me how the peg is lost. Does not make any sense to me. If you can redeem it and get $1 for it, the peg is there, regardless of what panicky traders are doing with it on some exchange. The price is what you can redeem it for at Tether. And so I think that this story, while it is now back to $1 on the Binances and such of the world, this is not really a story because it always existed. U.S. senators push bill to make small crypto transactions tax-free. Now, we've already seen Gillibrand and Lummis, as I've mentioned before, propose their sort of comprehensive view on what cryptocurrency legislation should look like in the future, which included a clause that talked about small transactions. I believe in that it was under $200. Anything under $200 would be tax-free, basically, meaning that you can actually use crypto as money and not worry about paying taxes every time you buy a goddamn cup of coffee with your fucking Bitcoin, because that is the worst bullshit nonsense that we have in this space, right? You can talk about Bitcoin and crypto as money all you want, but I don't want to sell my crypto to buy a orange mocha kappa frappa latte chino in the venti grande or tall size. I don't care which one of those sizes. I'm not using my Bitcoin to do it. Not only because I don't want to pay the taxes, because it's really fucking annoying to calculate that, right? Absolutely impossible. And nobody wants to do that shit. Doing your crypto taxes is absolutely horrible. Well, what Toomey, who obviously we have Toomey, that is a Republican, and Sinema, who is a Democrat, once again, bipartisan legislation that basically just locks that in right now before this whole legislation is done at $50. If you want to trade, make less than $50, go at it. If you have a $50 profit, you buy something that's less than $50, have at it. Don't worry about it for taxes. You can actually use crypto as money for small transactions. This is where I was trying to go. Zoolander, orange mocha frappuccino, right? Yeah. Sorry for that string of expletives that just came out. I don't know where it was. I guess it was because I was talking about Voyager right before, right? So listen, we should cheer for this. It's a start. It's not what we want. $50. Okay. I mean, if they can't get this passed, then we're in trouble with legislators in the future, to be quite honest. Because if they can't get this passed, then we can get a very good gauge of just how anti-crypto legislators are, because this seems like an obvious super layup. Just get your crypto in the seat of power. Listen, there are crypto people I would love to have the seat of power, but 99%, not 99%. I'll just say a lot of people in crypto, like people across the world, are complete and utter whack jobs. And I wouldn't want them anywhere near legislation just because they like crypto. But hey, that's just me. I mean, listen, like watching the arguments and fights, the infighting between different communities and within communities and the different levels of their communities that's going on right now in the bear market on Twitter and elsewhere. You know, like maxis attacking maxis for not being maxi enough. I don't know, man. I'm not hating on any of them. I'm just saying, like, you want those? We want them? I don't know, man. I feel like I'm a pretty reasonable person. I wouldn't want to be a politician ever. Ever. Yeah. Anyways, if I can use like $200, I could buy groceries, right? That's a meaningful amount. Absolutely. Absolutely. Whether you want to spend your Bitcoin on that or not is a completely different question, but that's absolutely true. $50 would be a very good start. Yeah. Bear market, man. Some toxic shit right now. Oh, dude. Yeah. I just try to stay out of the way. Tweet less. Don't respond. Ignore it. It's dirty and disgusting out there right now. And of course, Tesla sells Bitcoin. They made money, $64 million, but still post a $170 million impairment loss. That's because of the wacky, stupid, annoying, and impossible corporate tax code that we have, which says that you basically have to peg the price of an asset, digital asset, to the lowest point that it was during the quarter that you reported. That's why we never saw a whole bunch of institutions adding crypto to their treasuries after Tesla, MicroStrategy, and Square and such did it. Because if they ever wanted to sell it, or if they ever wanted to have it on their balance sheet and report it each quarter, they would have to basically report it at the lowest level it existed during that time. Not at the highest, not at the current level, but at the lowest. And it is absolute nonsense. And so they're posting a $170 million impairment loss while actually making $64 million in profit. You guys can try to figure that out. I did bring up some charts, I think. Let's see what we got here. I wanted to remind you of the Bitcoin monthly channel of amazingness, celebration, unicorn farts, actually death, doom, and destruction. Because if you've been following me for a really long time, I haven't talked about this in a while, right? But look, okay, first we have 3 support taps here, 2 very clear resistance taps at the top with this very slight wick above. But this has been down, up, down, up, down. Perfect confirmed channel since 2013 on Bitcoin. The never-ending bull market, if you will. Higher highs, higher lows. But in the past, you've heard me talk about this, most of you, but every single time it's flipped the EQ. The EQ is that dashed line. It's the 50% level, the equilibrium of any channel. Every time it's passed it, it's visited the other side. It had bottom, top, right? Flips it, bottom, flips it, tests as support, top, flips it, test as resistance twice, bottom, flips it. This was the case for $200,000 Bitcoin, man, right? We'd go to the top. We flipped it. Nope, broke down. Did I think that meant we were going to the bottom? Certainly not. But right now on this month, the bottom would basically be 17,000. And if we continue to chop sideways for a few months, which is very, very likely, I would say, the bottom of this channel is very, very much in play. Someone asking log scale. Yes, always log scale for me. As you can see also in that process, RSI on the monthly closed the lowest that it's ever been last month. Right, this was the low here. It was at 43.86. We got down to about 41.54. So if that gives you any context of just how shitty this bear market has been, there's been a hell of a lot of selling. But we are here, whether we touch it or not, we are now here at the bottom of that monthly channel. Now here, taking a look at the, I guess we're on the 4 hour. What do we got here? I wanted to look at the weekly, but whatever. Here, we can look at the weekly chart here. Weekly chart, of course, since I haven't gotten a chance to talk to you, we were super excited. We were pulling the old Leon Lett celebration dance before crossing into the end zone that the 200 MA was going to finally break and we were going to get back above it. 1, 2, 3, 4, 5. Now 6 candles in a row. Something that certainly has never happened. Closed below the weekly 200 MA, flipped exactly to resistance, and then a drop. Poo. That's why you have to wait till Sunday. Got to wait till Sunday when the magic happens. A game of inches. And once again, closing below the 200 MA sucks. Really sucks, man. But we had good weekly volume there, as you can see. This is Tether, Bitcoin Tether on Binance, which I've been using a little bit more, but major volume last week. Major volume. Actually, that next to May 21, that was the biggest weekly volume on Bitcoin on Binance. Wow. Did not know. Someone said volume sucks. Not the case. Bigly volume. Huge. And it was green, but absolutely rejected there. Kembe Mutombo. No. But listen, we were looking at the 4-hour there on one of these. Here we go. 4-hour back at the 200 MA. And that's the first retest of support since July 22nd there. But more notably, as I've talked about, the 200 MA has basically been resistant since April, right? All the way back here. Broke slightly above. We've been above it now for quite a while, right? We broke above it on the 15th. So it's been 11 days. This should be a major retest and hold. And we also have this demand zone right here on the 4-hour. So if bulls are going to step in, if you're looking at lower time frames, this is where it should happen. And of course, as I often tell you, if you go from oversold to overbought to oversold, we got up to overbought at 24,000 when everybody started celebrating. I said, dude, we're pretty overbought. We're going to make the trip probably down to oversold. Here we are, right? Do I know what I'd be looking for? Obviously, it would be to get oversold, make a slightly higher low there, come down here, bullish divergence. Doesn't have to happen. We did not have a bull div here. We did not have a bear div here. There was a bear div here. But that's what I will be looking for to give me a very strong signal. But we are once again oversold. Really nothing to look at on altcoin charts, to be quite frank, because, oh no, we suck again. Is this it?
Oh no, we suck again.
I find it. Oh, Binance added their spot trading fee. That's right. They had that massive wash trading sort of incident. So that's probably why that volume was so high. Oh, I got played. We suck now.
Oh no, we suck again.
Guys, yeah, that is basically what I have for you today. It's almost 10:30. I almost did an hour. I do not have a maid cleaning in the back. We reserve that for Chads like Harry Dent. I just have some cool blue lights. Hope that you guys have enjoyed it. I will be back again tomorrow, which is going to be awesome. I will not be here Friday. Well, you want to hear what I'm doing on Friday? It's going to be awesome. This is pretty crazy. Although we can't confirm the names. But I'll just say that I'm going to Los Angeles to play basketball with some professional footballers, soccer players, footballers from Juventus. BitGet, who sponsors my newsletter, is flying myself out. Nebraskan Gooner, I think, Castillo Trading. And for charity, we're going to play basketball with the stars of Juventus football team. Juventus being also sponsored by BitGet. So yesterday, I pulled out the basketball for the first time in, 25 years. I used to be a pretty good shooter. I dunked on my nephew. He's 15. It was an 8.5-foot rim, but I dunked all over him. Felt good. And we're going to play basketball. Then we're going to go to the Juventus Real Madrid game. But if you know who the stars of Juventus are, it's 2 or 3 of them that are the biggest names on the team that we're going to play basketball against. And I intend to probably get injured. I'm going to try not to get injured, but I'm 45 years old. I haven't seriously played basketball in decades. Yeah. Y'all should win. Those fellas never use their hands. No, I've seen some of them play basketball. These guys are, first of all, the 2 that we're talking about, one of them's like 6'5" or 6'6". The other one's 6'3". And they're real athletic. And I've seen videos of them playing. I can't say the names, but I definitely, I intend to give it my best because I don't really care what the situation is. I don't care if I'm playing a child, a professional athlete, my grandma. I'm trying to win at all things all the time. And no matter what happens, I do not intend. I will lose probably. I mean, the odds are stacked heavily against me doing professional sports against professional athletes, but I do not intend to lose. Yeah. Love you. Yeah, we're going to have fun. So that's what I got for you guys today. That is it. I will be back tomorrow. Don't miss it. Peace.